Okay, is everyone able to hear me now? All right, good feedback there. Okay, just wanted to jump in here and briefly, I am recording the webcast, so if you have questions and want to go back and review anything, you'll be able to. I'll send that out via email. And if you have questions throughout the webcast as we're getting started here, be sure to use the chat section and I'll get to those questions before we end today if possible. If I run out of time before 12:30, then I will follow up with you. And I was just looking at those results of the questionnaire that you answered, and it looks like a number of you are getting pretty close to a big milestone in your life, so congratulations on that. You're probably looking to answer the question, can I retire? And if I retire, what does that look like? From an income standpoint, will I be able to maintain my current lifestyle, or should I start making some adjustments now in preparation for retirement? So let's dig into those questions a little bit further. I'm just checking to make sure that everyone is still seeing my screen here. Okay. So hopefully you're seeing the presentation here, and there we go. So how will you know you are prepared and feel comfortable taking that leap into the retirement phase of your life? You all likely have an idea or vision of what retirement might look like for you. You may have thoughts and ideas that have gone through your mind as you have worked, and you've thought about what it might be like to be retired. Similarly, you may have envisioned your dream home, and potentially you've even thought about building your dream home, or maybe you're lucky enough that you live there today. If that's the case, congratulations, that's awesome. But when you think about building a home, you might consider what you want it to look like and the number of rooms, or if it needs to have a big garage for all your toys. If you want to have an office and maybe you want to be able to entertain friends and family, so you need to have space for them. Or maybe you're just looking for an oasis out in the country away from everyone else. But if you're going to build that dream home, and the vast majority of you may not specialize in building homes, you would likely hire a builder or contractor to help you execute the plan that you've envisioned. Now, the contractor will sit down with you and they'll take your vision and turn that into an executable plan in the form of a blueprint. And then they'll use that blueprint to build the home that you've envisioned, while also following local ordinances and making sure that they're meeting all the local codes. Now, that's similar to planning for your retirement in that you've spent your career specializing in your current field. And while you have accumulated assets throughout your working years, you may not feel 100% confident in how to turn that ball of assets into a paycheck like you're accustomed to today, and do so while also being tax efficient with your wealth. Now, a home builder has to follow the local codes and interpret the blueprint in order to build the house that you've envisioned. And similarly, a financial advisor is able to help you understand and manage upcoming risks and look at your overall plan, knowing what speed bumps or roadblocks might be up ahead for you and help you plan for those. Having a plan to return to if you get thrown off course somewhere throughout your retirement, whether that's a significant health event or a natural disaster that causes significant property damage, having that plan to return to allows you to stay calm and lean on your advisor to guide you to provide reassurance when necessary and look at your options when you're faced with big decisions. Now, keep in mind, there's no one-size-fits-all retirement. Your vision is likely different from your friends, your neighbors, your coworkers. And likewise, there's no one-size-fits-all retirement plan. It's important to find the right mix, and that really depends on many factors, which you see on the screen here: your savings, your expenses, your current health, as well as your family and your values. So I want to jump in on where to begin as you contemplate how you will know when you are ready to financially retire. I want to start with your expenses. So if I asked you right now how much income you will need monthly during retirement, do you know the amount that you need? Do you have a good grasp on how much you currently spend monthly? And if not, that's okay. The first step in planning for your retirement is to know your expenses, but I want you to think big picture about this. So for some of you that have not lived on a budget, the process might kind of stall out before you really get started. I want you to focus on the left side, on the essentials. These are the must-have expenses. You can review your current spending and make adjustments based on what you expect your life to be like during those first few years of retirement. And keep in mind that your first couple of years, there may be some adjustments. So maybe we estimate a little bit high on your expenses, and we can look for other ways to keep your money invested if that's the case. But I would err on the slightly higher side to make sure that your plan can support your income needs. And then be sure to include those things that you've always wanted to do with your time in retirement. So the travel, the gifting that you might want to do to family, be sure to include that in your overall expense plan as well. But you can look at your needs and your wants, and that will help you visualize the flexibility to adjust your spending if necessary as you plan for an earlier retirement. So while we're on expenses, I want to dig a little bit deeper on healthcare. Healthcare is likely going to be one of your largest expenses in retirement. The cost of healthcare continues to rise faster than inflation, and people are living longer. So retirement used to be 10 to 15 years, and now you might be looking at 20, 30 years or even longer that your wealth needs to be able to support you. So if you intend to retire before 65, you need to have a plan to pay for your healthcare coverage. Medicare eligibility starts at 65 in most cases. Even once you are eligible for Medicare, though, you'll have premiums and out-of-pocket expenses to cover. In order to bridge the gap between when you want to retire and Medicare eligibility, we can look at the options you see here. Your company may offer a retiree health plan. If that is not available to you, but you have health insurance currently through your employer, you might be able to take COBRA insurance, which is a continuation of the current insurance that you're used to. So that part's nice. You don't have to go out and find a new doctor, and you have a good idea of what's going to be covered by your current plan. So again, that's for up to 18 months. It can be expensive because right now you're probably used to paying the employee portion. You may also be responsible for the portion that your employer pays currently on your behalf, as well as an additional charge. So it can be expensive. The nice part is that you're familiar with what will be covered. Now, another option, if you and your spouse plan to retire at different times, maybe one of you is a little bit younger, or maybe you're around the same age, but one of you has a health concern, so that spouse needs to retire a little earlier. It might be possible to jump on your spouse's plan if you plan to retire in different years, and this could be a cost-effective solution for you as well. Some employer plans do have restrictions though, so be sure to verify if you can be added to your spouse's health insurance plan. Now, if one of these first three options aren't available or aren't viable for you, it's important to understand the costs of purchasing health insurance in the open market, as well as the coverage that you'll get with that insurance if you don't have another alternative prior to 65. Open marketplace is nice in that they can't deny you for pre-existing conditions, but the insurance is expensive, and what we've seen in some cases is that there might be gaps in your coverage compared to what you're used to right now. So it's important when you're looking at plans to see if there's going to be additional costs that you don't have currently for some of your regular medical care. Now, if you want to look at private insurance, you might do that if you wanted more inclusive coverage. So you might look at private insurance for that. Again, it's going to be expensive, and some private insurance carriers will actually look at pre-existing conditions and they could deny you coverage. So that's a caveat with the private insurance. Now, a tool that can help you prepare for out-of-pocket medical expenses is a health savings account. So you don't see that up on your screen, but if you are on a high deductible health plan today and you're not already using a health savings account, you may be able to utilize that type of account because it can play an important role in allowing you to cover qualifying out-of-pocket medical expenses now as well as in retirement. And you can also use it to pay that 18 months of COBRA coverage. And it can just help fill that gap in saving for healthcare expenses. So if you do have a high deductible health plan now, I would encourage you to fund the maximum amount into the health savings account if possible. Now that we've talked through your expenses, let's look at how you'll meet your income needs over the course of your retirement. So you can prepare for life's twists and turns with a retirement plan that combines multiple sources of income, as I've listed up here. Having multiple sources of income provides flexibility as you begin to draw on the assets that you've accumulated throughout your working years. It's important to know how much you've saved and where your income is going to come from in retirement, whether that's bank savings or investment accounts, maybe IRAs or qualified accounts. You might have a rental property that you're going to continue to receive rental income from. Maybe you have a pension that's offered through your current employer or a previous employer that will start to pay out once you retire. You might also have annuity income available to you. Or perhaps you're looking to retire or reduce your current work amount, but you also want to continue to work part-time during retirement. If that's the case, it's really important to know that up front as you're building your retirement plan, because that'll play into your Social Security and when to claim Social Security. So that's a very complex question of how do you get the most from Social Security? It's complex because your health, your expectation for how long you'll live, your family history, and the lifestyle that you intend to live in retirement, those all play a role in the decision of when to claim Social Security. It can certainly be tempting to claim your benefit as soon as you're eligible, which is typically age 62. But that can be a costly move, as the amount of your monthly benefit could be reduced by as much as 30% if you choose to take Social Security before your full retirement age. Now, your next question might be, well, what is my full retirement age? Your full retirement age, that's the age that you're going to be eligible for your full retirement benefit from Social Security. So it ranges based on the year you were born, between 66 and 67. If you were born in 1960 or after, it's going to be 67. And if you were born prior to 1960, it's going to be age 66 plus a few months, depending on the year. And so with each year that you postpone taking Social Security up until age 70, the amount of your monthly benefit will increase. So you have good reason to wait if you expect to live well past 70 and you can do without that income in your early retirement years. Now, I mentioned if you plan to continue working at all, whether that's part-time, that really plays into your Social Security answer. So part-time earnings, if you plan to take Social Security before your full retirement age, will be subject to the earnings test. Just to give you an idea, the earnings limit for this year, if you make slightly over $18,000, your Social Security will start to be reduced. So it's very important to know if you're going to work part-time, how much income are you going to have from other sources and how much income you'll have from working part-time, to look at whether your Social Security will actually start to be reduced by your part-time work. Once you get to your full retirement age though, so if you were born after 1960, that's age 67, if you wait until your full retirement age to take your Social Security, the earnings limit no longer applies. Keep in mind, Social Security benefits are going to be subject to federal income tax above certain levels of income. So, for instance, an individual filer, if you have income of $25,000, your Social Security is going to start to become taxable. So that may be the majority of you may run into Social Security being partially taxable to you. If you haven't already gone out to the Social Security website, I would encourage you to do that. You can go out to ssa.gov and obtain your retirement estimates. A couple things that you should do out there is look at your earnings history, verify that they have that correct as far as what you've earned over your career, and also look at your estimated benefits. So the amount that they expect you to be eligible for at age 62, as well as your full retirement age. That'll help you in your planning for how much you can expect from Social Security and then how much you need to come up with from your other income sources. Social Security really entails a lot of complexities. We're only, covering a few here. So when you're determining how to file for your benefits, we can help you understand your options. There's a number of moving parts, and this decision really requires careful consideration of your personal circumstances to see what will be most advantageous for you. Every individual and couple have a unique situation. We can assist you with constructing a plan that makes the most sense for you and your family. Now, as you near closer to retirement, it may be valuable to review your investment strategy. If you haven't already, you may consider positioning your investments for retirement. Whether your current investment strategy is in line with your investment needs for retirement is one of those big questions that might be weighing on your mind. When you were in the accumulation phase where you are today, you're still building up assets. The goal of your portfolio was growth. You wanted it to grow so that you had enough to be able to retire someday. Now, your investment goals may change as you reach retirement, and you may be wondering what's the best way to invest as you reach that next milestone. When you're only a few years away from retirement, a sharp drop in your portfolio can have a severe impact on your retirement plan. So let's say that you were looking to retire at the end of March 2020. If you didn't plan ahead and maybe change your investment allocation, you may not have gone forward with your intent to retire then. And that's what we're trying to avoid. We're trying to make it so that whatever date you have in mind, whatever vision you have, you can proceed with it regardless of market conditions. In retirement, your portfolio needs to be capable of generating reliable cash flow so you continue to receive income as you're used to today when you're receiving a paycheck. And it also needs to provide growth so that you can sustain your lifestyle throughout your lifetime. It's very important to balance that steady income with the potential for growth to keep pace with inflation. I want you to also keep in mind that when you reach retirement, it's not like you cross the finish line that day and all the financial work is done. Once you leave the accumulation phase, it's an ongoing process to navigate the ever-changing tax and estate regulations during your retirement years. It can relieve a great burden to have somebody else guiding you on the most tax-efficient way to be able to withdraw from your various savings accounts during the distribution phase, and do that with the goal of preserving your wealth. Because taxes become a headwind as you enter retirement. For instance, the withdrawals from your workplace savings plan, whether you have a 401k, a simple IRA, maybe you just have a traditional IRA. Those are generally taxed as ordinary income. So you save those funds pre-tax, and you might have put as much in as you could to be able to reduce and lower your taxable income while you're working. And now, as you withdraw those assets in retirement, not only your contributions, but also the growth in that account is in many cases going to be taxable. You may also have annuity and pension income that's taxable in most cases. You might have sources of income that you can withdraw from tax-free. This would potentially be Roth IRA or a taxable savings account. Please keep in mind though, and be aware that if you sell appreciated assets in a brokerage account to generate cash to provide that steady income, it may result in a capital gains tax. So you can quickly see how without proper planning, you could get caught up in several of these tax traps. For instance, the SECURE Act, that was passed in late December of 2019, less than a year ago. And that legislation provided several changes for retirees. It pushed the required minimum distribution age back to age 72. And so now once you're 72, you may be required to begin withdrawals from certain qualified accounts. That could trigger additional taxes for you. And this legislation also operates almost like an estate tax on the transfer of large qualified accounts to the next generation. One of the ongoing services that we provide our clients is to review their planning strategy and help you reduce your taxes during your retirement years so you can maintain as much of your wealth as possible. Now, it's really important to get the timing right for your retirement, and it really matters for your financial well-being. Many people relish that idea of starting their retirement ahead of schedule, but retiring too early could leave you without enough savings to maintain your current lifestyle. And so it's really important that you think long-term as you look to take that next step. When it comes to preparing for retirement, the earlier you start, the better. And I want to leave you with this checklist here. As you continue to envision your retirement, I encourage you to start with a plan. And I'm going to jump down to number 6 there as we get close to our 30 minutes. I want to encourage you, if you haven't already, to make sure that you have a will established and financial and medical power of attorney documents established as well. We are unfortunately in a pandemic, so I think we have all probably seen, at least on the news, how quickly our health can change from day to day. I certainly hope that you're all healthy right now, but I do think that these documents are extremely important. This is also a good time to confirm the beneficiary information on your accounts. So in most cases, the beneficiaries listed on your qualified accounts and life insurance will override any beneficiaries listed in your will or a trust. So just make sure that the beneficiaries on your accounts are updated as well. If you're wondering if you are prepared to retire early, please reach out, let us guide you through that planning process and assist you in realizing the retirement phase of your life. We can help you maintain an efficient withdrawal strategy that provides not only the outcomes you're looking for, but also helps meet your goals and values. And we will be sure to help address any specific questions pertaining to your needs. So I'm just taking a look at the time here. We are getting pretty close to the time. I want to thank you all for being with me today. I know we had a few hiccups there at the beginning, but we got that all worked out. And I hope you have a better idea of where to start planning and some of the considerations to ponder. I welcome the opportunity to discuss how you can work with us or how we can help you plan for a successful retirement. And with that, I'll just go ahead and let you guys have the rest of your day back. I will be following up again with the recording, so you'll get that via email. And I see that we definitely have some questions out there, so I'll follow up with those as well, since we just aren't going to have time to be able to get to those today. Thanks again for being with me. I hope you enjoyed it.